The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this Friday, Technical Friday it is, here on the 7th of December. Yesterday at this time, the Dow was down about 406, I think it was almost 600 points. And then during the show, we started a rally. I'm going to go into some of that in a moment because I'm doing a webinar a week from today. It's an all-day webinar. It is talking about patterns that repeat over and over, what technical tools can really help you. I call them under the Chapman Wave auspices, is under the umbrella. But really, they're trend lines, they arches. Look, I've drawn this in ages ago, this H pattern in the Dow. I say we've come down from 26,951 the 3rd of October. The very next day, we had a sell signal for my subscribers. We went all the way down 24,122 on October 29th, had a rebound, and that rebound started. That was also the midterm. You remember there was that extra push to the upside to 26,277. And then I drew in the H pattern. I said, okay, there's a chance that we could start to form this pattern. Well, we made that first lowercase h, and we went down to 24,268, rallied to the same trend line that I had drawn in, that dashed green, I call the Chapman Wave inside track, repellent zone, went fractionally above it, closed inside it, and then 3 days ago, kaboom, to the downside. Started that second arch. So this is the template that I had drawn in some time ago. I also drew in another template. Do these work all the time? No, they work, but they work a lot of the time. Look, the rectangle, I said, we're going to be in a trading range in this rectangle from the January high to the February low, rebound, and then retest in April. That looked very much like the pattern that was unfolding from the 26,951 all-time high, October the 12th week, down to the 24,122 low. And then we rebounded really sharply to 26,277, and then we came back down again. So all in all, the patterns are the patterns. They just continue to really surprise me at how well they work. Not always great to be able to trade these because the moves are so quick, and sometimes they happen overnight where you can't really get into the position. Or sometimes the move, I have a once a day newsletter. So yesterday's turnaround, now I can go through what we were looking at yesterday. You remember during the show, I said, oh, it looks like we made some kind of a low. I said, when the market powers to the downside, scares the data out of everyone, and then starts to rally, and everyone says, okay, this is it, this is it. And then it turns around and it takes out that low. That's when everyone just throws up their hands and says, throws up actually, says, oh my God, I just had this, I'm done. And then what happens is the market turns around. I said, uh-oh, we've made a trough G in the Chapman Wave methodology right here at 1132 or something it was. The exact price was 1130, 2621.25, and started to rally. And I said, oh, leg A, I think we're going to make a B. And we followed, and I said, yep, we've gone through a C. And then during one of the breaks, I circled in. You can just see this little circle right here where I said leg D should have happened. I came on air and I said we've been going sideways for a little while. Now we should have a rally to the 2650 area. And then if that's the case, 2653 is the 200-period exponential moving average. No, let me get it exact. It was exactly, 2652 and a half. And what happened is, I said, hey, but this is really nice because what we've done is we've started a leg A up that pulled back, and now leg B is unfolding in the 5-minute chart. So we looked at the two, and I said, hey, wait a minute. You got to think of this as a daily, a weekly, or a monthly, or a 120-minute chart, a daily and a weekly. Because if this is the case, this strong leg C, if it goes to a D, that's going to be really good for the 5-minute chart. The 5-minute chart keeps moving, and that was only leg A in the 10-minute chart. See what I'm doing? I'm trying to throw the baton over to the next person, the next time frame, so that your buy mode, if it is a buy mode, can continue. Well, look what happened. Here's the 2-minute chart, and it went to, what did it go to? Went to leg D. There's the circle, that actual oval. It went right to the 200-period moving average, and it pulled back, and then it held the 9-period and the 14-period, and it's continued higher. Went to a leg E. But wait a minute, what did the 5-minute chart do? The 5-minute chart went to the requisite leg C. It went to a peak C1, C2. It's a double top I'll teach during my webinar. And then it pulled back. But very often what we've seen is C1, C2 gets retested, and you actually do make a D, or you can even restart a new up move. So here's the move that we're looking at, because it went to a leg C in the 5-minute chart, but it was only a leg B in the 10-minute chart because it's slower, it takes more time. Pulls back, and the next thing you know, and let me just show you this, I'll open it up for you, because this is what we're going to be discussing right there. Leg C comes back down. I drawn in this rectangle formation, and I said rectangle formations can last a lot longer than your patience. This finally goes to leg E, and now I want to show you. Look at that rectangle. Look how long that lasted. And if you want to be really specific about it, we are still within the rectangle, and we've made yet another. I'm just dragging this across to show you. Look, we're still within the rectangle. Isn't that amazing? I mean, just how does a chart know? How does a chart have memory? Well, the chart doesn't have memory. People have memories. And that's really what I'm going to be teaching. How do these patterns, these fractals, keep repeating in different time frames? How important is that? Look at the one that started today right here. So now we've got, it goes to a trough, a really important trough at 3 o'clock this morning. And I had a Chapman wave indicator out from Tuesday that said there's a huge rally in the Chapman wave trend gauge. That's Richard Arm's trend index. And there should be some kind of a rebound intraday when the market opens sometime on Thursday. Well, we got that early. Then we got the pullback, and then we got a whopper of a move to the upside based on rumor. What was an absolute rumor? And then what happens is I had another signal yesterday. It wasn't as strong, but it said there should be a 9 to 11 point rally in the E-minis. Boy, was there a rally. The rally goes from this morning at about 265-ish and runs all the way to a high of 2709. I mean, that's huge. And then it comes plummeting down and hits the bottom of this trend line at 2650. Now we're trying to, once again, try to form some kind of a base. This is what I'm going to be teaching, and we'll do it. We'll study the patterns. And of course, most of them are based on the lowercase h that can go to an M or an arch formation or a cup formation. It just repeats over and over and over. The cup could be almost like a V-shaped pattern, same principle. So it's a week from today. I'm going to teach the left side, right side price time match. I'm going to teach the repellent lines, the support lines. I'm really looking forward to it because it should be very, so what a time, what a period to be able to do something that you can use in your intraday trading, your swing trading, 3-5 day trading, or your longer term trading. Basil Chapman, Target Editions Hour. I'll be right back. Dow's down 373, S&P's down 38. I'll be back and we'll talk indexes, etc.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back, and during the break I was asked would I look at the Nikkei. I'm looking at the Nikkei futures, and all I can say is the pattern that I discussed before. Let me draw this in. Study these patterns because they repeat, I mean, just forever. You can look at these patterns and they just come over and over and over and over again. The lowercase h that can go to a lowercase m is exactly what we're looking at there. I just drew it in. I'll just rectangle it so that you can refer to it as the template. There's your template. And what do we look at? We look at the Nikkei futures going to a peak after the Chapman wave back in October. I think it was like the same as the Dow was at the 3rd or so. On the 1st. At 24,515, plunges down to a trough B, and that trough B is at, on the 26th, it goes to 20,825, has a rally to a C, pulls back, makes an arch formation, doesn't take out the left side low, has another strong rally and goes to that D, and D doji with a very sharp pullback on the 3rd of December at 22,780, and then you get this Chapman wave Roman candle from yesterday. You've gone into it halfway. All I can say is if this stays, if this at 21,360, if there's a close below 21,370 today, there's a real good chance the futures open down Sunday night. And Monday, you go very close to, or maybe even retest the low that was made yesterday of 21,075. So that was for Ruby and the Dan. Let me just have a quick look back. Yeah, Ruby Nikkei. Yes, so this is what I'm looking at, that the Nikkei in the daily chart has made the lowercase h that goes to lowercase m invariably the 3rd time round. So we've already had 1, we've had 2. 1, 2, 3. The 3rd time round is where if you don't get another H pattern, in fact, it fails about 30% off the bottom, then there's a real good chance that if it takes out the most important low that was yesterday's low, not only will you go lower, but you will test the low that was made initially. In this case, it's the low that was made on the 26th of October at 20,825. That's about 500 points. Whoa, 500 points from here to the downside. The best case would be another little arch formation trying to rally to get to the resistance levels at 21,000. 990 to 22,100, somewhere in that area. And then peak F in the weekly chart, very serious sell mode in daily, weekly, monthly. This week, you could say, you know what? There's a very good chance that that was definitely a peak F top in the monthly chart. You're in for time and price to the downside in the Nikkei, but it's only it's the first week of the new month. So all I'm saying is that this month is not starting off very well. Even the 120-minute chart has got an arch formation. Be careful out there. That's what I'm saying. All right, let's go through the numbers now. There are a couple of other questions that are coming. I'm having a little trouble with the email that I usually get at this particular time. So I hope I'll be able to get it on another computer. So here we go. The Dow. So remember, a week from today, we're going to be the first couple of hours, we're going to be utilizing that time to go through the different chart patterns, show you examples, practice some examples, get you to identify them. It's going to be your trading vehicle. It's going to be your moment to say, hey, I don't understand. I've always wondered about this. What happens over here? And then we can discuss and say, these are the possibilities. Where's the MACD? Where's the stochastic? I'll do the naked chart so you can do it without anything. I often do things just purely on the basis of the pattern that's being formed. And then I check it with the moving average. Then I might even check it with something like my Chapman wave automated support and resistance lines. Look how that worked yesterday. 24,292 was the 120-minute chart support. We went just below it, and we ran up. Where we stopped at the previous 24,952 support that then became resistance because we went just under it, and today we popped over it. Now we're way below it in another H pattern in the 120-minute chart of the Dow. It's also Chapman wave 4 with a 5 possibly beginning now to the downside. We have made a trough B. All right, let's get back to our nitty-gritties here. In the S&P, those rectangles are exactly the same. Let me just go. So the Dow parameters to watch right now, down 368 at 24,579. It went right to the 200-period exponential moving average of 25,033. What was the high today? 25,095. So it goes a little bit above it and then pulls back. It's slammed to the downside. The weekly chart, those rectangles, this is a pattern. Those H patterns within the rectangle, this is the pattern. We're in a trading band. And until we break the trading band by closing under 23,000, the short term, it will be 24,080. If we go under that, certainly below 24,000, next level will be 23,300. That is my target for this particular phase of the bear market. Okay, now on the upside, I've given you that resistance. Let's go to the S&P, SPX next. The S&P right now is trading at minus 40 at 2657, minus 38 actually right now. And there is that same pattern. The lowercase h goes to a lowercase m. And we went to a lower low. We've made a trough D. That's why yesterday's low should have had some kind of a deeper spring to the upside this morning that held after being negative. And it hasn't done that. It's gone to a pretty sharp decline. So that's saying to me that the MACD is very weak. It hasn't crossed negative yet. Stochastics are weak at 55%. The MACD and stochastic in the weekly charts are very weak. Look at those terrible candles. Oh, today's Friday. This is the end of the week. Whew. That monthly chart, everything about this monthly chart says the MACD has crossed negative already now for 3 weeks, 3 months. This is the third month, so we can't talk about it as if it's close. It's just begun, in fact. And the stochastics at 66%. This does not augur well at all for the S&P. There's every evidence right now to say that is a peak E. It's not an alternate count A that's going to go to a B, C, and D. I think this is an E at this particular point. Thinking is one thing, doing is another, and it's the middle of the level from the 14-period moving average of 2,700 to the downside and the upside. So all I can say is watch this really closely. This is not a time to be playing games. Let's go to the QQQ. The S&P is down 1.48%. The Dow is down 1.50%, and the Qs are down 2.18% at 163.24 minus 3.68. There's a second H pattern, but it's way better than the others. Funny enough, the weekly and monthly charts are really poor, much poorer than the Dow and the S&P. And yet what's very interesting is that the daily chart didn't take out the left side low, because it had already taken out its left side low of 160 to go to 157.13 in the arch formation. Almost a number of bars from the left side to the right side are being matched here. We'll see. All I can tell you is this: upside 166.80 is extremely strong resistance. On the downside, a close below 162 would be very, very negative. All right, let's go to IWM as we go to our second break. IWM trading right now down down 1.55 at 145.65. It has taken out the left side low. Yesterday it did lousy action. The monthly chart is in a sell mode, so is the weekly. I'll be right back. Now it's down 367.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yes, we will get to Boeing. I was asked about that yesterday by Jerry, and I'll talk about it. I don't see any rush to get into Boeing. I just want to quickly show you where we are updated. That rally going into the 9:30, 10 o'clock high, peak D in the Chapman Wave methodology. Right there in the E-mini, S&P E-mini, at 2709.75. Look what happened. Trough A, Trough B, Trough C, Trough G, Trough E, and we're still making the H. Oh, I meant to get my CD out, introducing the Chapman Wave methodology. Remember, the lowercase h can keep coming down until at some point it tries to make an H to M pattern or a V-shaped recovery. Look at the 10 minutes. So this is almost like a 2-minute lev to the daily. 2-minute led to the 5-minute. So that's now we're in the 5-minute. Let's call this the weekly. And here's the monthly, or the 120. Here's the daily, and there's the monthly. So they both made peak D. When I get that consensus, I love it in the futures. When I get, so hard to have patience, but if you have the patience, then you can get to a D, E, or F in the 2-minute chart as you're getting to either an E or an F in the 5 and 10-minute chart, or everything looks like D's are going to work. That's fantastic. I love that unison. Then I get a hat-trick top in the short term. So look what happened, a big hat-trick top, and it goes from the 5-minute confirmed in the 10-minute, and look what happens. 10-minute plunges down and goes to that big long rectangle support. That's where we are, attempting to make 226.50 the key support here. Whoa, it's going to be tough. Technicals are ready, but the price isn't. All right, let's get back to our nitty-gritties. We were on the IWM. The IWM made this H to M pattern, lowercase h to lowercase m, just two arches, and a big one, lowercase h with a left side takeout, but we haven't closed today underneath the low of 144.70, I believe it was. Let me just double check. Yeah, 144.70, the week of the 26th of October, but we have gone lower. And now it's leg C, but so far we're at 145.36. The day is young. Will the IWM be able to close above it? That'll be important, at least for an attempt next week to rally. Otherwise, wow, leg B in the monthly chart, and it's about to test that at 143. It tests the uptrend, major uptrend line that goes all the way back to 2016, I think November of 2016. Man, I tell you, this is going to be very interesting. Let's go on. We're going to want to go to gold, because gold now, this is very different. Gold is up $7 at 1250.90. This is a leg D, and it's extended from yesterday a little higher. The MACD is good. Stochastic is now very good at 90.19 in the daily chart. If gold over the weekend all of a sudden has a big spike to 1252, no, if it can go to 1258, nah, I'm going to make this even more refined. If over on Sunday night, gold goes above 1254, that 200-period moving average of 1258.90, let's call it 1259. Is going to be really important, because that starts a leg C in the weekly chart in this very narrow up channel, but absolutely steady up channel. That's been impressive for me. The fact that it hasn't broken down when the dollar was acting so well is really important to me. But I think it's only Royal Gold that I'm looking at out of the heavies that I follow that is doing well. It's in leg B. It isn't even close to the 80 level that it was at back in mid-October, but at 77, it's good. And it's way off the 70 low that was made, and it's trying to form a cup formation in the weekly on the 200-period moving average that has support at 74.20. Why do I use Royal Gold? You know, it's a royalty company. It does a lot of things right. They probably, I followed it for so long. Ari often calls in, I say often over the 10, 12 years, Ari's always called in, and he's always in either long or short Royal Gold, and he played it all the way down from the top. And I think we spoke about the 200-period moving average of 74 being important. So to me, this is important. It's tested it multi weeks. It's been going on for about I think it's going on, is that a year? Yes, it's gone on for about 3 months in the weekly chart, and it goes back to 2017 when that bar shows you it was back here and at some point in 2017, May, June, July. This is the area that it was in on the way up. So this is really very important. But I'm not looking. My ASA is the one we don't often buy it in my opening calls for subscribers. Sometimes we do. We have another one, a smaller one that we play. This is not showing any strength at all. If I'm looking at, I think ABX is the one. I think Royal Gold and ABX, one of those had amalgamated. So ABX, which is Barrick Gold, is acting quite nicely because it's made a cup formation in the upper. This is one of the better chart patterns on the daily. The weekly also is quite impressive. So all I can say is that GDX, the gold miners ETF, is right now at 19.94, up 23 cents. It actually should be a lot more. This should be a fear play. I mean, money should be flowing into gold with all the bank stocks acting so poorly and the market acting terribly. I don't understand. I kind of do. I think it's also inflation. The way it's measured as an inflation hedge, it isn't showing up right now. I think it will at some point. But right now, this is pretty mundane action, but it is positive because it is moving higher. I'm impressed that the GDX is steadily moving higher. And now if we can go to gold, gold was almost unchanged, then it was a little down, and now it's down 0.05. Not a big deal, except it's a big deal because it's starting to test this major uptrend line in the daily chart, which it hasn't worried about for a long time because it always used it as a Chapman wave inside track propellant area. And now it's starting to decline with the MACD week, stochastic week, and the weekly and monthly charts are holding very nicely. I think that if gold starts to trade at 94.50, you're going to see a big problem with that. But if the dollar can hold you, it's going to say that big countries, not mutual funds, these are our hedge funds, countries are trying to look at the dollar as a safety haven for themselves. That's the only thing I can think of right now. And we've been long the dollar for the opening call since the beginning of April. So yeah, I think, but it is so far King Dollar, but I would only call it really anointed King Dollar when I see it trading for a whole week above 98.50. All right, at this point, it's still just a prince. All right, let's get back to our nitty-gritties here. The TLT. The TLT has had a spectacular move. It's hugging the 200-period moving average of 100 at 118.05. Good weekly candle. My suspicion, and it's been that for a long time, is that that peak that was made in the TNX weekly chart is the first opportunity that the TNX has had, instead of breaking out, is now to go back into the trading range. But this week was a surprise to me because of the speed with which I did say that I thought it was in a downtrend within a trading range between 27 and a half and maybe 32. But the speed with which it took out this key uptrend line in the weekly chart that was around about 29.40, 29.40, unbelievable. It just took it right out. I don't think the Fed is, they kind of stuck. They're going to have to say, you know what, we're going to hold back a little bit. That should be helping the markets, but it's not. I'll be right back. Straight off. Down to 60.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. We're back. So, yes, the bonds are rallying right now. Actually, they pulled back. They're minus 30 seconds. This is a leg E. And the 30-year T-bond continuous contract. The 200-period moving average has always been a repellent. When I say always, I mean the whole of 2018, since that big breakdown back in the January slide, the market slide, and then bonds started to come into play, and they made lower lows, and that meant that the yields made higher highs. My thinking here, now this is so fascinating, I was about to discuss it. I was trying to find a way in which I could discuss it because I didn't want it to become political. And absolutely coincidentally, I get a note saying, Basil, I'm thinking the Fed will raise in December just so as not to look like they are caving into Trump and then back off for a number of months to watch for more data. I did not want to post this so as not to be political, my 2 cents. Well, that was exactly my 2 cents as well. Actually, this is what I discussed, I think it was about 4 weeks ago. I said there's a real good chance that the Fed is kind of stuck now. They don't want to be looking like they're following the president's wishes because no Fed really chairman wants to do, not even Yellen, although she completely did. She didn't really want to make it look that way. You don't. You want to look independent. You're supposed to be independent. In fact, the Fed technically should be totally data dependent and completely independent of what either the stock market or the president is wanting. In reality, that's just not going to happen. They have to be both data dependent and they have to be realistic. And being realistic, I don't know how many times I've said this before, but to be realistic, I'm just trying to see if I am able this time to get those emails. I've got some of them. I haven't got them all. Let's see if I can do it. Okay. To be realistic, my cash index, I've been speaking about this all the time. Remember, Friday week, if you want to learn about developing some techniques that can really help you, the MACD, the stochastic, the different moving averages, I've refined my moving averages over the past 2 years. I've developed a couple of new techniques that I'll be discussing. Week from Friday, week from today, all day. I think in this particular market, look, you could lose a few $100 just by making one mistake for 3 seconds. 3 seconds in a market like this. Rather use that money for education. So education is really the thing that I'm talking about over the coming all-day webinar. Entries and exits, December the 14th, 9 o'clock. Till 12, then a break, and then 1 o'clock Eastern time till 4, and then 4 to 4:30 we do a wrap-up, so it's until 4:30. It's many hours work. I mean, I just saw a business person today I'm not sure what the 30 minutes is going to cost me. This is the way it is. But that's, you know, these are the what you get here at TFNN, I think for the most part, is one of, when we talk about inflation and deflation, I think this is the period where you get a real bargain for what you pay. At least I believe that. So going back to the Fed, I agree. I think the Fed is going to raise, and then they're kind of independent because they're raising. And then I think they're data dependent, but I've got a feeling from January we're going to start to get the weak data. So my cash index, Syntas, C, look at that action. 172 after making an all-time high just a few months ago at 217 in an H pattern. Look at this H pattern in the daily. Look at this H pattern in the weekly. Oh my God, look at this H pattern in the monthly. Something better happen in December into January so this doesn't go back below to test the 168 level, because if it goes to the 150s, that's overalls, uniforms, and rentals. Amazon, this is the best season, surely. Down 45 at 1653. It goes from 2050 to 1420, round number. That is one of its biggest declines. It's certainly one of its biggest point declines ever. But and in percentage terms, this is a pretty big decline. This is supposed to be when it's doing real well. That stands for the A. The S is SPY, which is the S&P 500 trading vehicle. This is called the S&P, excuse me, depository receipts. Made a peak E doji high. I think that's the serious stuff. So there it is. There's your SPY. What's it? What? Home Depot, it's into everything, everywhere. Goes from 293 down to 167, bounces up to the 180s, and is now at 173. This is bullish. This is a PE for sure in the monthly. I don't think this is good news. So you've got cash, Syntas, Amazon, SPY, and Home Depot. I think that's as broad as you can get. Maybe I should have had Berkshire because he's into everything. Hey, where's Berkshire? BRK. .B. Yeah, Berkshire Hathaway goes from 224.07, had a 224 round number open on the 10th of October. There's that Chapman way. We'll learn about this technique. It is so important. There's the cup formation, the drop bucket, lowercase h upside down, so the Y inverted. This right side had very poor technicals when it compared to the 223 round number high of the 20th of September in Berkshire Hathaway, pulls back to the 200-period moving averages, rallies back up, fails, comes back down, rallies back to a lower low, just a series of lower lows, and then what happens? Plummets and down 3 today at 204.97. I think that this is in at least a sideways to down move. I don't have anything. The technicals are very poor, but I can't talk about it because I need the full month to unfold. If on December the 31st it closes at 100, under 197, under 190, yep, under 197, it goes to a sell signal, not a sell mode, a sell signal. And this is all, I mean, Berkshire Hathaway is in almost every facet of the economy. All right, so now we're going to go to crude oil. So yesterday we had this whole thing going on. We were looking at it, and I said, you know, I don't really like it. I think it's ready for a bounce, but I would not be surprised if it has to do a little retesting before it bounces. Well, lo and behold, it did that both yesterday and today. Crude oil is trading up 220 at 53.70. We were looking for in the den. We were looking at rig. Someone had and said, "What should I do?" And I said, you know, if you're in it and you've been wrong for a while, 2 points going from the 8s to even the 10s is not a big deal. If you're going to get out, then I would make sure that I had some kind of a stop, and I put my, at least on a worst case basis, I'd put my stop underneath yesterday's low, in this case 836. But it's the monthly chart and the weekly chart that is really the issue. And the weekly chart said it's taken out the low that was made. I think it was 872. What did we say it was? I said it enough time. 870. It's trading at 873, 3 cents higher than the weekly close way back in February of 2018. So I don't see it doing all that much. And if it's going to do it, it needs speed and needs to get above 10 and needs to do it early next week. So all I can say, I'm going to stay with that. And for MRO, we had our caller yesterday. I'm going to get to Boeing straight after this. I actually meant to get to it before. MRO is holding much better. And that's saying, you know what? It's also...
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Don't forget, folks, Steve's coming up. Steve's also got a webinar next week. I have one a week from tonight. Check a week from today. An all-day one. Check it out because I really think it's going to give a wealth of information to those people who just want to improve their trading, improve their entries and exits, etc. TVIX. I wonder if Greg's still in his TVIX. It's now at 51. We were talking about it in the 40, 41-ish area. Fantastic. Great trade. VA. Really not much to discuss here. Boeing is down 6 at 325.64. Not a big deal. It's in the trading range. Excuse me. 390 round number high just a few days ago. 296 low. I just all-time high 394.28 October, the week of the 5th. I don't see anything. I just don't see anything yet. And I'm really worried that Boeing, based on the technicals in the weekly in the monthly chart, let alone the weekly, are going to take out the low that was made right there at 296.61. This is not good. I just don't see anything. But it had a spectacular run. I think Boeing needs time. If anything, I'm going to draw this in. Let's see how that works out. I'll draw in the oval pattern, and if it can hold and just briefly take out 300 and then come right back into the trading range, just use time over the next 2 months, order backlog or not. I've seen order backlogs just get diminished at certain times with like airline companies when the countries get really nervous about their economy. So yeah, I'd just be careful. Next week we'll talk about a little bit more, maybe give a better range. So any bounce right now is very important because you want to save the day. Let's see where we are on the 5-minute chart. Yeah, we went to a trough D in the 10-minute. We went to a trough F in the 5-minute. Yeah, trough F right here at 2657. Don't take out 2640 by the end of the day. That's all I can say. But if there's a rally above 2663 that holds, good. You can save the day a little bit. But the Dow's down 345. Not good. I'll be back. I'll be back on Monday. And my subscribers to my opening call, check out the opening call. There will be a couple of charts coming before the close today. Have a wonderful weekend. Please check out front page of the opening call of the Tiger page and see my upcoming webinar, full-day webinar. Have a great weekend.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.